Hello, I hope you're having a great day despite an important event that happened at the beginning of February that's already having a negative impact on both mortgage professionals such as myself and of course realtors. So in the next 3 minutes, we're going to take a closer look at what happened, why it happened, and how does it change, or maybe does it change, the predictions we've been making for the real estate market for the summer of 2023. As we established in the previous episodes, there is common knowledge that mortgage interest rates follow inflation. So it's no wonder that in 2022, when inflation started to climb, interest rates followed and basically doubled. To control inflation, the US Central Bank, simply referred to as the Fed, adopted a strong anti-inflation stance and increased the federal funds rate 7 times in 2022. However, when you look at this chart, the Fed's most recent increase, the first of this year, was only 0.25%, and that sent markets into a bit of a tailspin, which was further aggravated by the Fed's chairman's comments that suggested that inflation is under control, and this smaller than expected hike was in fact part of the Fed's trying to engineer a soft landing for the economy. As valid of a reason as this may be, this was interpreted as a complete change in the inflation fighting stance of the central bank. And most analysts believe that this action may have been premature. After all, the economy is still doing very, very well, and the inflation is definitely not under control. So to make the matters worse, within literally just hours or days of this announcement, we received a series of economic reports that seem to confirm those very fears. December job creations number came out higher than expected. Consumer price index higher. Personal consumption expenditures higher. The producer price index that measures inflation on the wholesale level came in higher. New job creations came in higher. Initial jobless claims lower. So all of these reports and many more I have not mentioned seem to suggest that the inflation is far from being under control, and Fed should have remained more aggressive. So in view of these reports and in view of the apparent softening of the anti-inflation policy by the Fed, mortgage rates climbed sharply. So the big question now remains, does this change the predictions we've been making for the summer of 2023 for mortgage rates to drop substantially? In my opinion, it does not. And the reason I say that is because you can't take these reports at face value. A lot of these reports contain information, contain data that's lagging a bit. And I'll give you one perfect example. A good measure of inflation is the core CPI index. Well, the core CPI index, 40% of it is actually made up of shelter costs. And don't worry, I'm not gonna bore you into trying to explain shelter costs, but the fact remains that shelter costs in the past few months have been dropping. However, the shelter cost data that's included in the current core CPI report is still the data from a few months back. So I guess what I'm saying is when the newer, lower shelter costs start catching up and showing up in the future CPI reports, that's going to cause the core CPI to drop, indicating inflation, in fact, is dropping a little bit, and interest rates are likely to follow. Therefore, I remain optimistic, and I think the Feds may have actually gotten this one right, and they're just going to wait a little bit for these lagging information to catch up and see if they're right or wrong. So there's two possibilities here. Let's say this does happen. Fantastic, the market is going to love it, mortgage rates are going to decline. Let's say this doesn't happen. The Fed is going to have no choice but to resume its previous aggressive anti-inflation policy, in which case the interest rate markets are going to love that as well, and interest rates are going to drop. And with that, let's remain geared up and ready for a successful spring and summer in both mortgages and real estate. That's all in this episode of The Closer Look, brought to you by Lendonia, where we deliver more than just mortgages, where we deliver information, ideas, and lending integrity. Thank you so much for watching. Have a fantastic day.